spoke about. Let's see when we're recording. All right. So yeah, for those of you who watched our yesterday's session, live session that we do every single morning, Monday to Friday, you would see that we spoke about EJ. All right. And we spoke about EJ was trading within a range, which is this orange box. And there was something that we believe was building up above this box, above these equal highs identified by some of these arrows here, which was liquidity. We said on that call to look out for the market taking or sweeping that liquidity. Have a look. Nam, 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 nam. This is a sweep of that liquidity. That's the market pushing up here and taking that liquidity. Okay. So look out for this. All right. And look out for where the market's going to break afterwards. Now have a look. Even on a 15-minute time frame, the market indicates up there, starts to correct, but doesn't continue in this direction. All right. It doesn't continue pushing this direction. It actually grabs the liquidity and starts to break bearishly. Therefore, not being an indication, correction, continuation, but being a liquidity grab and running in the opposite direction. And this was the trade that it was, if he was able to get into on a smaller time frame, then the market ran for about 70 pips. Okay. Now, obviously here, if we drop down to our 5-minute time frame, have a look. So I said to you guys, for entries, you can look at 5-minute time frames. Okay. And those of you who are more competent can even drop down to a smaller time frame. All right. Now, this little wick here is the highest point. It's the last highest point over here. All right. So that line would have looked something like this. All right. That structure would have been taking this into would have been taking that into consideration here. This level here. This is an indication. This is a correction. This is a continuation. You could have placed your stop above the last high, you would have possibly got stopped out by this wick, or in a safer place above this high, which the safer place makes more sense because this distance is only, 20 pips. Okay, so only 20 pips or so. Now there is a smaller entry, guys. All right, the smaller entry is dropping your time frame down to the 1 minute. I'll show it to you, but remember, you don't have to be there because there is where all the dead bodies reside in day trading. It's people trying to trade on a 1 minute time frame. Why? Because they are so impatient. They don't want to wait for a 5-minute candle. They don't want to wait for a 15-minute candle. They just want to get in and get busy straight away. All right. Now have a look. When this market was up here, and we're looking at this market here, we're looking for some structure to and seeing how this structure is going to break. Now, if I was looking at this here on a 1 minute time frame, I'm looking at some of these smaller levels. Something in here. All right, the market didn't quite close how I would like it to close below this structure here. So this would have been the indication, but there was no correction. There was no a correction and continuation. It started to correct, but it started to come back up here. Okay, no problem. Now we're looking at these levels. Okay, so this is structure here. Let me try and I'm going to delete everything off my screen because I know it's getting mental. All right, so let's do that. All right, so we're looking at this structure in here. This structure in there, and we got an indication here closing below this structure. We've got a correction, we've got a continuation. This could have been your entry into the trade, and this was my entry into the trade. Okay, like so is an aggressive entry, which has is harder because you have to be more attentive to if the market kicks back on you. Or you could have placed your stop over here, and then from there the market continued to run bearishly for about 70 pips. I think when I put it in a group, it's about 60 pips. Okay. Now, since then, the market, if we zoom out of that, get away from such a small time frame, has been kind of dancing around a little piece. All right. It has been dancing around a little bit. Have a look at its dance. Okay. So I'm going to zoom all the way out, and we're just going to put some more lines in once again because I did delete everything off the charts. Okay. So when we zoom out, if I hit my reset button, make it really small, is to be able to identify what this market's been doing. And let me show you a few things this market's been doing. You can draw a box if you want around here. You can draw a box around there because that box is symbolizing the highest the market's ever been, okay? And, the lowest it's been, all right? Trading within this range and this range. That's what that identifies, that box. I don't know how well I've drawn it because I'm so far zoomed out. I don't know whether that is perfectly on top of there or not. I can use my magnetic tool to help me with that, but I can't bother. All right. Now, let me make sure that's in the background. finish there. Am I going mad? I think I'm going mad. All right, so what I'll do is I just leave that there. All right, but also you can see how this market has, within that energy, been, quite bullish. Now, it doesn't really matter how we place these. We could place one like this if you want. Then when you start seeing the market moving away from it, we could start doing one like this if we wanted to. Okay, and we can start doing this here. And now in that current energy here, we can see this market is trading within this range, like so. Okay, and if we drop our time frame down to our daily, all right, we can see that even though we're obviously, as you see, I've zoomed in, we're not as accurate, but if we try and be a bit more accurate, we can see that the market, even within that daily energy, let's do this. And we're just trying to touch some of these, connect some of these dots, okay? Try and connect some of these dots. So on a bigger picture, we might say, I'm gonna make this a different color, that this market could be trading within this bigger kind of range, yeah? But we can see a smaller impulse that this market has been trading within, kind of like so. So therefore, we're kind of at the top of this smaller impulse that since December, yeah, don't get twisted. This isn't like since yesterday. Since December 2023, the market has been trading within, making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. A little bit of a wick here. For all we know, it's going to be news. It looks like an anomaly to me. Higher low, higher high, higher low, within this range. So therefore, right now, as we stand, we are in a premium of that little range. We also spoke yesterday about something called RSI. Does anybody remember what RSI stands for? Does anybody
Relative
remember?
strength index.
Relative strength index. Okay. Now it's not something that I trade with regularly. It's not something that I use. However, it's something that that I want you guys to know about. I want you guys to know everything about trading. Yeah. And the relative strength index is just essentially indicating where the relative strength. In fact, let's read the definition of it in Bobby Google. All right. Let's read the definition of the relative strength index. All right. Let's have a read of it.
Description: the Relative Strength Index, RSI, developed by J. Wells Wilder, is a momentum oscillator that measures the speed and change of price movements. The RSI oscillates between 0 and 100. Traditionally, the RSI is considered overbought when above 70 and oversold when below 30.
Okay, so we spoke about this. We did speak about this and how to read the RSI. Okay, and essentially, if we go and we pull one up that we was looking at, which I can't remember which one it was, but let's just pretend it was this one. It wasn't, but we can still use this one. All right. Is that ultimately when it says, remember what the definition says? It says it oscillates between 0 and 100. Okay, so this is our 0 down here, and this is our 100 up here. But ultimately, 30 and 70 is the overbought line and oversold line. Now, this is a different one that we was looking at yesterday. Let me try and see if I can put the same one just so it does not get confusing. Now, remember, these indexes, these indicators are just made by random people. Yeah, there's lots of differences. Some of them's got a relative strength index with a little bit of seasoning or something else in there. Some of them's got that with an EMA, and some of them like this. Some of them's this color and that color. Some of them are showing the one we looked at the other day, which I can't find, which was one that also broke it down on the days. I mean, on the time frames. Okay, but either way, they're all the same thing. And what they're showing us in a nutshell, let's have a look. Let me ask you guys a question. You can say it out loud, or you can say it to yourself. If we was looking in this range, or let's look at this little range here. Let's look at this range. Down here, or up here in this range, we'd be looking to sell, even though this market went sideways for a little bit. But up way in this range, we'd be looking to sell. This is here, overbought area. All right, look over here. Up here in this range, this is before it got into a tighter range. It'd be very in a premium again, and we'd be looking for sells. We wouldn't be out here looking for buys. All right. If we go and look in this smaller, tighter range here, you can see when the market's up here in this level, this here is up towards the overbought line. When this market is at the top of a premium, you can see the RSI is up in this overbought area every single time. All right. So basically, it's an indicator that is showing us something that we don't necessarily need to see because we know how to reprice and know how to draw some trend lines and understand where we are in the universe. All right. But that's ultimately where someone else doesn't do that. Someone else doesn't know. Someone else's chart just looks like this, and they come in the morning, they just see this, and the only thing that they want to see when they see this is they want to go and put on their RSI, wherever it is. I've just got rid of it, and be able to see whether it's overbought or oversold. All right. But we can do it in a way which is a lot more comprehensive and understanding how the market is moving within what kind of range it's moving in. All right. So let's drop our time frame down and see what's going on. So there's definitely some kind of conversation happening here because the market's come up to this level and we started to do the hokey cokey a little bit. Yeah. Look, it's come up and pushed up all the way into this premium. So we're taking into consideration this line and this line. Now, can this market go and do something else and start pushing up at the top and go into space? Of course it can. It can do whatever it wants to do. All right. I wish that I could make it do what I think it's going to do, but I cannot. Okay. But the reality is that based upon this energy of what the market has been doing since December, trading within here and here, we're in this premium area. And if I was to draw a line, identifying what this smaller impulse, it'd be kind of looking a bit like this. All right. Let me do that. Let's try and make it look a bit neater because my charting is getting sloppier and sloppier. All right. But kind of like this. All right. Kind of like this. Previous to this little high over here, you know, it would have been taken into consideration. This angle here would have been the highest point, and then the market started to go a little sideways over here. Started to go a little sideways. Okay. Now, ultimately, we want to see this market breaking outside of this box. Obviously, on a smaller level, there were smaller boxes and smaller battles being fought and won. Okay, what do I mean by that? I mean that obviously we was identifying and looking to see whether that market was going to grab the liquidity above this high. Because remember, it's easy in hindsight now. Yesterday, we didn't have all this information here. Hindsight now, we're like, oh yeah, we know this is happening, we know that is happening, and we can see it going, it's still going sideways. But yesterday, the market was in this little box here. This is all we had yesterday. Look at the time, 6 o'clock Monday. This is all we had. So when we saw this liquidity being taken, we was in for the sell. Boom, and we profited. Then the markets came back down to the middle of this range again and had another little reaction. And now looking like we potentially maybe wanted to break some push down here. Now, hopefully, this market is just making a decision and wants to come down here. Because we grabbed a little bit of liquidity from below first. We grabbed a little liquidity from above. Now we should go. I call this the wigwam. Yeah. When the market is actually trading it, like consolidating like this, and then it's so greedy, it doesn't want to just take the liquidity from down below. It wants to take the liquidity from above and then go in this direction. All right, it's terrible drawing, but you can see that this was the range. It was Detroit. It doesn't just want to take the liquidity from below, stop everybody out, but then it goes up here and takes the liquidity from above, and then goes in this direction. That's what I'm hoping this market wants to do right now. And it's going to start going to hell from here. Okay. However, this market has been tremendously bullish. And even though we are up in a premium, the market has been going up like a missile like this for some reason. For some reason, Euro's been so substantially, stronger than the Japanese yen. Just because I've drawn some lines and just because the market has previously traded within this range, well, at some point in time, it can have a change of character. It can start doing something else. But for me right now, some major, milestones, if this market can start doing something, is breaking this level, this level, this level, this level. Now, why did I identify this level in here? Because we've seen a huge imbalance, a gap, and it's at the top of a previous structure. This is going to be showing me something. Now, is this market going to start pushing down there and doing a madness? Hopefully. Yeah, hopefully. How can we get involved? Now, for full transparency, I'm already in a sell. from some time, as I showed you guys yesterday. Okay. And that trade's doing really well. And I'm looking at it right now. Have a look on a smaller time frame. All right. This market here, the question is are we going to start breaking below some of these structures? All right. Some of these structures. All right. Because the market came down from here. In my opinion, when I've seen this historically, doesn't mean it's going to happen again. All right. Does not mean it's going to happen again. But historically, in the past, when I've seen these markets do the wigwam, which is what I just spoke to you about, the wigwam is this. We're going sideways, minding our business. And then we say, you know what, bro, there's money at the front door and there's money at the back door. A man's like, okay, which one are we going to take? And then we got greedy Jermaine who says, listen, let's take both of them. And when we see this happen, nam, 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 and then nam, 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 it's normally because the market actually wants to go in this direction. Yeah. However, that's not a foregone conclusion. That's not like nothing in this market. It's not it's just simply that's what it is. So we're watching it. Yeah. And this market on a smaller level, as this market, we took these profits yesterday, came back up into here, into these levels. Let's go and drop our time frame down, see what's going on. There were some imbalances that were filled on a smaller time frame as this market pushed back up into these levels over here. Let's go and have a look on a 5-minute time frame. Okay, and when the market got up into these levels, we've seen an indication, correction, continuation below structure, and the market is now pushing bearishly. The question is are we going to start breaking some of these levels? Yeah, and this market continue, because I really want to see this market accelerate. I don't like this angle that's coming. I want to see it fall to hell. Now let's go and see whether or not in the world there are any catalysts that may help us. Okay, and that means going and looking at the scheduled news and seeing if there's anything going on. Now today we have Fed bar speech, Fed Chair Powell's testimony, and that's the red folder news that we have for today. Could that affect our EJ? Possibly, possibly. Why do I say possibly? Because anything with USD is possibly. Because USD is the reserve currency of the world at the moment, even though lots of countries are trying to sort it out and fix that. And when it sneezes, the world catches a cold. All right. But we can see tomorrow we got inflation rate coming out of China. Very interesting. All right. And some orange folder Euro news also. All right. So not no obvious catalysts. All right. Thursday. Obviously, yeah, Wednesday, some stuff happening. Thursday is looking quite hectic as well. Got lots of USD news, CPI, etc. But let me tell you something about the news, guys. There's always news. It's news every day. You know what I mean? Guys will say, I don't trade when there's news on. There's news every day, bro. Yeah, so really you just got to be concerned about the short-term effects of when that news is landing around that time of being able to manage or not be in the trade or not. Okay, but there's news every day. All right, that's why it's very difficult to just be like, I don't trade when there's news. So when do you trade, bro? It's never not news. Yeah. So at the moment, have a look in this little energy here. Even though I want to see this market completely clear past this blue level, it's going to be a real milestone for me down here around the 173.5 level. We'll get over here. It's a real milestone that this market can get down here. But the first milestone on a smaller tip is going to be here around the 173.9 level. There's going to be another little milestone that I want to see this market push past. Is this market trading down within this range? Well, I don't know at the moment. I've only got 2 data points to work from here and here. Okay. And I've pulled that line out to this lowest point here. Is this market trying to get down to this blue line? Hopefully. I don't know. Okay. If that's the case, maybe on a smaller level, because we're on a 5-minute time frame, maybe this market is trading down within this range. Now, when you hear me speak and you hear all the maybes and possiblies and that, it's because we understand there is nothing, all right, for certain. All right. There's nothing for sure. There isn't like a yes, 100% this is going to go and do this. Yeah. Anyone who talks to you like that, be concerned. Any educator that you're on there and say, yep, it's definitely going to go down now. When it doesn't go down, it makes you a fool, isn't it? Yeah. When it doesn't go down, it makes you just said definitely. You gave it 100%, bro. If your 100% don't mean anything, then what are you standing on? I'm not giving nothing 100%. This markets can do a madness. Yeah. And that thought process means that you are always using this. Your lot size calculator should be your best friend. If you haven't got this, I'm going to put it in the chat box. If you haven't got that bookmarked, haven't got it even saved, I've got it saved on my phone like it's an app. Yeah. If you haven't got that bookmarked, being able to be somewhere where whenever you're taking a trade, you can go and check out your lots. Yeah. Here's some terminology for you guys also. Yeah. For some terminology, you might hear somebody say, yeah, I took a standard. Standard they see is one lot, yeah, or 100,000 units. A mini is a 0.1, a micro 0.01, and a nano. Some brokers allow you to do nanos, 0.001. These are just terminology. Yeah. Have a look, have a listen. Just go here.
In Forex, a lot defines the trade size, or the number of currency units to be bought or sold in a trade. One standard lot is 100,000 units of the base currency. Most brokers also allow trading with fractional lot sizes, down to 0.01, sometimes even less. Fractional lot sizes are categorized as mini lots, 0.10, micro lots, 0.01, and nano lots, 0.001. Please refer
Yeah.
S.
So
Forex calculators.
give me a break.
Pip calculator.
Wow.
Lot size calculator.
All right. Yeah. So, that is some terminology. So when somebody turns on and says, what you might say, yeah, I just put two standards in. I had just one standard in, one lot. Yeah, just language. Okay. But ultimately, like I said to you, this calculator, which is very, very easy to use when you're trading traditional Forex pairs. Why? So you don't have to worry about the contract size. You just have to change this from, pips. From price to pips. Yeah, you don't want it to be price. You want to be able to place your stop loss. You want to be able to measure it out here using your tool, whether it's going to be this tool here, and say, okay, look, that distance there, you see that number in the middle? 22.4 pips. Okay. And then you want to be able to go into your lot size calculator and put in, yep, you're not going to put 22.4 pips in. I don't teach like that. You're going to put 25 pips in. You're always going to be the side of caution. Yeah. And plus, you're going to add your spread times 2. Yeah. Understanding
Question
your.
after Jay, please.
We say, bro?
Sorry. So I got a question once you finish, please.
Let's go.
When you set your stop and you're in a trade and your trade's running very close to your stop, so you feel you possibly move your stop, does that mess up your lot size? So if you moved your stop and then your trade was going in the opposite direction and you pushed your trade up again, does that affect your risk to reward ratio? If it was already set, then you moved it, and then you set it back.
It's a good question and a bad question. So the question is this, from what I understand. All right. And let me use some extra tools today that I haven't used, because if you've asked that, that means that other people have that same question or don't know it, because you are somebody who should know the answer to that. But it's good that you've asked. All right. So let's go over here.
I think I do know the answer.
No, it's fine. It's good that you asked. All right. So let's go back to our charts. Look, ultimately, guys, is that this. Moving your stop loss is a cardinal sin. All right. Let me show you what's a cardinal sin. If I've made all my plans based upon 22.4 is the risk. So basically that 22 point, let's imagine here, 22.4, and I want this to run to 66.6, so 1 to 3, okay? All right. So, so this 22.4 equates to $100 $100 This is my dollar sign, by the way. It's pretty bad. All right. Dollars. It's a mess. Okay. $100 worth of risk. What you are willing to lose. Jay, I am willing to lose $100 and $100 only. Okay. Now, if for whatever reason you're trading and trade starts going good, I'm in profits, look at it going down, if it's going good, yeah, man, I'm counting my money, what, $300 up, or whatever, $200 up, then you start getting this scenario. It starts come back here, you're in minus 40, minus 60, and you do this. This is your stop. Because you want to stay in, because you don't want to get stopped, because you know that this market could turn around up here. Maybe you didn't see something. Maybe you're just scared and you just don't want to get stopped out and take the L. And you do this and move it like this. All right. What have you done? You've just increased that $100 loss to potentially $130 loss. Now, if your $100 was your 1% or was your permitted risk, you're now over your risk. You're not gonna incur. Remember, there's no guarantee you're gonna win. Just by moving the stop loss here, you're not guaranteeing you're gonna win. And then you got to ask yourself this question: where does this stop? Let's imagine that you move it to here now, and then this starts going. Oh yeah, it starts chasing you. Which I'm telling you, it's gonna seem like the market is chasing your stop. It's gonna start doing this. Where does it end? Do you do this again? Move this up a little bit more? And now you're at $170 risk? You don't do this, guys. Moving your stop is a con. Let me show you why. By the time you move your stop over here, and you're at 180 quid loss, or 170 quid, I think I just said, loss, 170, you are nearly double what you was willing, which is this one over here, to lose. You're nearly double. You're 30 quid off taking another trade. So wouldn't it be better that you just took an L here for $100, watched this market, because you watch this market go up here, way past your 170, maybe it got to 180, and then wait to see it start breaking structure, giving you the confirmations, and then getting in, and then getting in again over here if it meets your strategy. Wouldn't that make more sense? Let me tell you why it will make more sense. You ready? Firstly, like I said, this could have kept going all the way up here to $200, and at $220 it turned around and you stopped you out for $200. So you're a mug now because you just lost twice, double the amount you wanted to lose. All right. Secondly, that's going against your rules. You have your risk management rules. You're only losing $100. It's not how much money you're going to make. It's how much money you can keep. It's capital preservation. You cannot take $200 L's. If you start taking $200 L's, you just halved your lifespan in the market instead of taking $100 L's. Thirdly, if you take your $100 L here and then wait to see if this market is going to, turn around, your new entry is going to be all the way up here. So if you was moving this stop like this all the way up to here, even when this market starts to turn around, it's got to move 40 pips just to get you back to zero. Even when this market starts to move in your favor, it's got to move all of this distance here just to get you back to zero. So you're $200 in the hole, and then now you start feeling happy just to get back to zero. But the aim of the game isn't getting back to zero, is it? You're not making no money by getting back to zero. So you're better off taking your small. Listen, let me say something. Say it out loud. I love small losses. I love small losses. Because the fact is that you will take losses. You see, if you move your stop from 100 to 200, you are now saying, I'm feeling the burn in the back of my throat for a large loss. You don't want no large loss. Small losses is cool. cares? 100K account, I lost $100. Who cares? When you start pushing past your risk, that becomes a problem because I'm telling you, it becomes a slippery slope. And you know what happens is it starts becoming learned behavior. I know there's some people on this call right now that move their stops. When they see they're about to get stopped out, they move their stop a little bit. You know why? Because one time they moved their stop a little bit and the market just didn't stop them out and then went down in their direction. So they start thinking to themselves, yeah, next time I see you doing that, I'm going to do it again. It's learned behavior. But let me tell you something. This moving the stop, moving the stop, moving the stop. You're going to move your stop from $100 to $240, and then you're just going to see some spike come from nowhere and go down, take your money. You're going to feel like, oh my goodness. Don't be like that. There's not a problem going to the casino, you know. Listen to me and understand what I'm saying to you. There isn't a problem going to the casino. You and your missus or you and your partner put on a look of shoes, go to a nice casino, central London, have a little drink, you know, maybe go to the bar, listen to a little music, then you go into the casino and you say, you know what? Here's 100 quid. Come, let's go and see if it's our lucky night. We had such a lovely night already. Let's go see if we can have another lovely night and win a little money. Maybe tomorrow we get to go and do it again or go and buy something nice. There is not a problem with that. That's called entertainment. The problem is if you're in there sweating in your t-shirt, yeah, gambling with the rent money, and you've not only blown your $100, but you've gone to the cash point and drawn out another $200 and lost that and gone to the cash point again. That's why they have cash points. If I see man going to the cash point in the casino, it's bad energy. Maybe when you first get there, you go to the cash point because you ain't got cash and you want cash, cool. But if I see man going backwards and forwards from the cash point, it's a problem. You're in the casino, you're supposed to be winning money. Why would you be going back to the cash point? It means you lost your money. That's what it means. So all of my brothers will know when we go casino, when we used to go casino, we don't really go like that. If you go to the casino, whatever money you come with, that's your money. Or if you go to the cash point once, that's your, if I start seeing my brother going back to the cash point, we're busting up at him like, bro, what are you doing? Yeah? You don't want to be in this game gambling, saying that you want to lose $100 and then halfway through you've changed it to 130. No, in fact 170. In fact, the market's still going up. Let me make it 250. Like, what are your rules, bro? You've got a problem. You're just gambling. If you say I'm willing to lose $100 and you go to the casino, use $100, you say, bro, guys, that's me. I'm out. I'm gonna go and sit at the bar and wait for you man to finish. Because you know what it is. It's a little bit of light entertainment. You didn't win today, wasn't your day. It's cool. You're not gonna start going and putting in your £1,000 in, your $3,000 in. You're in, like, because what are you trying to achieve? So therefore, move it. What I'm trying to say to you guys is moving your stop is a cardinal sin. You can move it in the opposite direction, reducing your risk from $100 to $50, from $50 to break even, from break even to moving it into some sort of profits. That's fine. But moving it the other way is a cardinal sin because what you're doing is you're increasing the amount you're going to lose. That's what you're doing. And remember, this trading game is about it's about capital preservation first, wealth creation second. Yeah? If you've decided that you want to go in at 500 and lose 500, that's fine. You've made a conscious decision beforehand for whatever reason you decided to go full tilt into a trade. But that still has an element of control. You're saying I'm willing to lose $500. That can't change to 700 halfway through the conversation. And I'd be like, well, you mad? What's going on? You just told me 500. How are we at 700? Yeah. So answer to your question, Jason. Moving your stop loss increases your losses, and it's something you should never do. You should have planned your trade out to the point where you have made a conscious decision that you're getting in the trade here, you're placing your stop above this high, your spread times 2, and then you are going to let the universe do what it does. And if it stops you out, you say, oh, well, no problem, but at least you've only lost this small fixed percentage that you can absorb. Do you understand? And to relate this to anything in life, if you take out the kids, it's a Saturday, you're willing to spend 50 quid, getting them something to eat, maybe doing this, maybe doing that. You're willing to spend 50 quid. You don't start making it on a slide and you've just spent $5,000 on a Saturday because the kids wanted to go to, McDonald's 15 times and they wanted new trainers and you cap it, right? You have some sort of budget that you're going to be like, nah, we've already spent money here, there, and everywhere. That's it, we're going on. It's the same with your trading. You have to cap it. You have to say, this is what I'm willing to lose from this trade. Does that make sense, guys? Does that make sense?
Yeah.
I hope it does.
Definitely.
Yeah, you must cap it. And even if you want to go one step further than that, a lot of people, and it's a good idea that you do the same, is you cap your losses for the day. You cap your losses for the day. If you lose, I'd say 3% in one day, some people say 2%, but I say 3% in one day. It's not your day, bro. Your goggles ain't quite calibrated in the right way. Yeah, you're off. You know, when footballers are off, certain times footballers are off, sometimes the best in the world. They're just off. Yeah, if you lose 3% in one day, just wait for tomorrow, bro. Sleep on it, man. Do something else. Go for a walk, clear your head, come back tomorrow and trade. Okay? Like, yeah. All right. So that's that. You have to cap. Like I said, it's all about capital preservation. And this is why people do so bad at trading. I'm not gonna lie to you guys. Like, I've always been able to read these charts like a book, like from quite early. My problem's always been on the side of risk management and ego. Do you get what I'm saying? Like, is the mental side of trading. That's always been my problem. I'm just letting you know. Understanding what's going on is not an issue. The issue is that I want my lot size to be 150 lots. My issue is I want to get in on that 1 minute time frame instead of being calm and getting in and putting my stop above the swing high. The issue is that I want to clock and pass my challenge in 1 day, 2 days, instead of just being like, tomorrow, the sun's going to rise tomorrow, I can do it tomorrow. So learn from my mistakes. Yeah. Be very, very strict on your risk management. If you can be very, very strict on your risk management, the other side, the understanding what the market's doing and learning how it moves, etc., that's the easy bit. Yeah, the other side is the hard bit. And I'm telling you, I know what it is. You're looking at it, you're risking $100 or $10 or whatever it may be, and you're looking at it, it's at 93, and you're like, oh, let me just move it up a little bit. I know you've done it. You can't tell me you ain't done it. Everybody's done it. Just move it up a little bit. Or worse, let me say the worst one that somebody could do. What's the worst one? What am I going to say? What's the worst one? What's even worse than moving up a little bit? What is even worse than moving up a little bit? There's somebody out here that's just deleted the stop loss. They've got no stop loss. You trade without a stop loss. It's like, yeah, you've got no protection. Yeah. You're just out here with no protection doing a madness. Yeah. You don't want to be that person. You must trade with a stop loss. Not unless you're very, very advanced. And it doesn't matter what other people have said to you, because I've heard some things online, trading for a stop loss is for beginners, blah, 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 blah. Okay, cool. No problem. That's fine. All right. Maybe that person's made a certain amount of money. And because look, you can trade without a stop loss if you've got a different kind of plan. Maybe you've made 100 grand. And then you've decided you're going to start taking some, you put £1,000 in an account and you're trying to trade and do some sort of mad kind of flip over an account with $1,000 and you're willing to lose that $1,000. So on that basis, if you're willing to lose $1,000 today, it's not no biggie. Maybe trading with a stop loss is a bad idea because you don't want to get stopped out. You're willing to go minus 999. Not that to say you can get that far because your broker won't allow you to get down to zero. Yeah, there will be a margin that they will say at a point you get to a certain margin, at a point when you get to like minus $100, they're gonna close you out. Okay, but let's say for argument's sake, then maybe that's the reason why you're trading without no stop loss. Maybe, but if you're doing a challenge or you've got your hard-earned life savings in an account, why would you trade without a stop loss for NFP to come out and some big spike to turn up from nowhere and take 50 grand off you out of your 60 grand account? Doesn't make sense. All right. So you're better off trading with a stop loss. And if you want more leeway, having bigger ranges for your stops, which will affect your risk to reward. All right. Because markets don't typically just go in one direction forever. Yeah. They move in a way where they come back on you. All right. So therefore, when you're looking at your targets based upon structure, if I've got this bigger zone like this, for example, imagine my zone was like this, and I was targeting this low down here. Well, that is only a 1 to 1.6. Yeah. Whereas if obviously, I'm in here and I got in some tiny little zone like this, well, that's a 1 to 18, a substantial difference. So that's the difference between you turning a grand into 18 grand, yeah, or turning a grand into 1600. There is a difference. Okay. But one carries its own terms and conditions, which I've explained to you guys many, many times. All right. And I believe that as a new trader, yes, it's great to turn and say you got a 1 to 25, but it's a lot better to say that you got 10 1 to 2s, 1 to 3s, than to say that you don't know what you was doing, you kept getting stopped out, and then the luck of the Irish plus a chicken foot and somebody cracked an egg, yeah, allowed you to take a 1 to 18. It's not sustainable. Your next trade is not going to be a 1 to 18. Yeah. So therefore, you're better off being able to sustainably take trades and get your wins in. So that may mean a larger or smaller risk to reward. Okay. Meaning the 1 to 2s, being happy with a 1 to 2, 1 to 3, being happy, but doing it every day. Saying, Jay, I'm not going to lie to you, for the last week, I've been getting 1 to 2, 1 to 3s all day, every day. That's wicked. Keep that. And the joke is, you don't ever need to change that strategy. You don't ever need to start saying, okay, now I'm going to be going for 1 to 18s. Why? Keep doing 1 to 3s, just get more money. Just get more money with your 1 to 2s, 1 to 3s. It's not the game. This isn't a game of like, who gets the biggest risk to reward, they're a better trader than you. No, it's a game of who's the most profitable. All right. So if you might get a 1 to 18 and then you lose 20 times in a row, well, you're not making any money. You're losing money. All right. All right, cool. So let's go and look at another pair, all right, real quick and see what they're doing. Let's go and look at a US 30 for argument's sake. I know some people love a US 30. Let's have a look. Before I didn't like it. I didn't like where it was. All right. I didn't like it's set up, as you hear people say, the setup of where we are. I still don't love where we are. Yeah, we're possibly near the top of this range, possibly. Okay. Let's have a look at it on a smaller time frame. The market came to the top of this range here, broke some structure, came and made equal highs over here, meaning that potentially over here, we have to be aware of the potential liquidity sitting above this level, and a liquidity is a price. All right. And we're currently, near the premium, but this liquidity is a concern of whether this market wants to nam it first. All right. We've come down here to a discount, pushed up into a premium, came back down to a relative discount, but we are making these higher lows, which is a concern. I'm not over the moon with this at the moment. If I drop my time frame down and look at it on a 4-hour, look at it. Look at this. It's a mess. It's just going sideways with a little wick, taking the piss because of the news, and then sideways, a little wick again, and it's coming like it's not the most appealing. I can't wait to get involved in. Look at this. Which way would you trade in this? Bullish or bearish? Who knows? Who knows? It's just a hot mess. Yeah. In trading it, like I'm not excited to get involved in this at the moment. I can't lie to you. Maybe if I see this push all the way up here and grab this liquidity, maybe then I'm looking at potential sells. Maybe then I'll be looking to see if it's breaking structure. But for now, I'm not over the moon with it. Let's go and have a look at XAU USD. And let's have a look and see what's going on. Okay. Let's zoom out just to know what's going on and have a look again on what's happening here. Again, if I remember correctly, I wasn't over the moon with where we were, location-wise, because we've got this range here that the market's been trading within, this and this. All right? These orange lines. And at the moment, this little white impulse is kind of slap bang in the middle of that energy. Now, we are, based upon some previous data points, which I'm not even drawing that well. Let me try and draw them a bit better. Try and draw them a little bit better. We are in a premium of this little white impulse. Now we're in a premium of that white impulse, and the market may make its retracement like this. Look, which is treacherous in itself, and then touch this point and then decide it wants to push up in here. Yeah, there's nothing to say it has to fall to hell like this. Doesn't. All right. So, if I was leaning on it, I'd be looking for sells. But at the same time, I'm very, very concerned that we're kind of in the middle, that this market could decide to just rock it back up to this orange level. So I'd be reading and reacting if I had to, yeah, trade this market. Have a look at it on a 4-hour time frame. Look at it. What is it doing? It's doing a hokey cokey. It's trading within this gray box. Yeah, if I had to, I'd be reading and reacting. And to be fair, where we are right now in the middle of this range, I'd prefer to see this market. I'd prefer to see this market get involved above that green line or below that green line. If in an ideal scenario, on a smaller scenario, we are at the bottom of this range, which is a discount of this impulse. But yeah, it's a load of fluff. Look, last time it was at the bottom of the range, this market was pushing up here, got to this little point here, and decided it wanted to turn around. Yeah, what's to change? What's to stop it now from deciding right now it wants to turn around here? Nothing, because it's in the middle and it's indecisive, and it's in an area that we don't necessarily trade from because it's neither a premium or a discount within this consolidation. But if I see this market breaking out down here and correcting and continuing, then great, I'll be in for the sell, trading this from this premium, seeing what's going to go and do. Let's go and see if I look at something else to see if there's anything else that's a bit more tasty. Let's look at GBP NZD. All right. Let's have a look at the and see what's going on. All right. So we've got some previous markup in here. I'm trying to do this quickly without having to delete everything off it. So have a look. I'm zooming all the way out, and we can see that this is a bearish market, making lower lows, lower highs, lower lows, lower highs, and we'd be expecting lower lows based upon what this market has been doing. Look, ping, pong, ping, pong. We'd be expecting ping. Okay. So we're in a premium. And if I had my relative strength index up, which I'll pull one up, just to show you guys, this is what we was looking at. Did I have it here? Where is it? Is it here? It's not in here. I'm just going to pull up anyone. Relative. Well, let me see if there's I'm trying to pull up the one that was looking at yesterday. See, some of these have RSI with divergence, RSI with the candles, RSI with blah, 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 blah. They're all the same stuff, but people have added a little source. These guys here, Glaz, Shizaru, these people who created these indicators have added something to them. All right. Let's just use this one here at the top. If you can see here, look, at the top of this level here, look where we are. Above the 70. 70 is overbought, meaning you're selling from there. And then when we get down here, we're down by the 30, which is oversold, which is in a discount, means you're buying. Yeah. Now this market has been drawn out. It didn't just fly across, it's been drawn out more sideways. And you can see how this market has been moving the energy more, keeping within that 70 point. Yeah. Right about now, though, have a look. At this point, when we got up here to this point here, we's above this little 70 line, selling opportunities. And even then it sold off and it started to do the hokey cokey and ramp. Yeah. So GBP NZD, I'm hoping to see this market at the moment. Let's get rid of this. I'm hoping to see this market bearish, to be fair. By the moment, it's just doing what it wants to do. Yeah, there's elections. There was elections in the UK. There's US elections. There's blah, 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 blah. And maybe it's just rampant. By the moment, I'm also not in a hurry to try and hit the button on this trade. Yeah, I'm not in a hurry. I'm not overly excited about going and doing that. Okay. Last one we look at is gold quickly. XAU USD. And let's delete everything off our gold chart. Or should we? Can't be bothered. All right, so based upon gold, also we can see that the market is trading within this orange range, okay, which is part of this bigger range. So in part of this bigger range, we're kind of in a discount area. But if this market is trading within this little white range, within this orange range, we're in a premium of that white range. All right, have a look what I mean. We're at the top of this little white, so sorry, zoom out a bit. We're at the top of this white range. Okay, so the question is this market going to try and get down back into this discounted area here, or is it had enough of that and it wants to push up because the bigger Russian doll is that orange range? So is the market really just trying to get up here first, this orange range, and then come back in here? But we don't know. And this is why we have to read and react to what the market does. Okay, we've got to read and react to what the market does. So at the moment here, would I be in a hurry to get involved here? No. And your relative strength index, again, if I whipped it up, whoever it is, let's go and get it, should be showing you also on the smaller time frame as I've zoomed in, that it's not ready yet. Well, up here did tap into this little high of this range. So I don't know how this index is. Just let me change this time frame. Yeah, so you can see right now as we stand on our time frame, the market has come down to a demand area here, okay, but ultimately we're waiting. If I was to trade this gold, I'm waiting for this market to close below this level. Why? Well, even then, to be honest, I'm not, because of this wick. I'm talking about indication, correction, continuation. I want an indication below this wick, boom, and a correction and continuation. At the moment, this didn't break this wick. It's just wick on wick. All right. So on an hour time frame, if I was to get rid of this now, yes, we might have broken some other structure up here. Maybe there's some structure in here. Maybe it's ugly. It's got to my 15 minutes, so we can have a better look. Yeah, this wick is a problem, pushing all the way down here. Yeah, it's a problem. I'd really like to see a break below this level here. Yeah, for me to start, being confident the market's going to be bearish. At the moment, this wick, even though this was an anomaly and could have been some news, whatever it may be, I noticed how the market came all the way back down here and did not want to get past this wick. Meaning there was a lot of buy orders, a lot of demand in and around this price point that scared the market off a little piece. Yeah, so I'm not going to be in a hurry to be selling it off until I can see that the market can bust through that level. Okay, i.e. indicate. I.e. indicate. That's what I want to see, an indication first. Give me a heads up. Give me something to work off. I don't want to just work by faith or just what I believe. Give me a little heads up showing me that this is what's going on. Okay, so that's why I wait for indication. So maybe now we're at the top of this range. Maybe we see this market have a reaction here of a smaller kind of structure coming from here. Like you can see here, we've broken structure here. We've broken structure here. So this is an indication. Maybe this market coming up here and closing would be a correction of this smaller impulse. And maybe it closing back down here would be a continuation that maybe that market will run all the way down and break this structure at some point. Maybe. Maybe, baby. Okay, but at the moment, have a look on a larger time frame, this market has been bullish, making higher highs and higher lows and higher highs and higher lows, and nothing, my lines on my screen do not mean that this market is going to stop doing that until we start seeing changes of character on a decent time frame. And this is the hour time frame. Look at it on the 4-hour time frame. See, this is a higher high above this level, this structure in here. This is a higher high. This is quite a big retracement. Higher low. Is it going to push all the way up in here? I don't know. But at the moment, it's showing a lot of demand at this price where these wicks were pushed out, pushed away. Hence the reason why I said breaking that level would show me something, would teach me something. Okay. On the bigger picture, let's have a look. Sorry, just see what this market is doing. Yeah, on the bigger picture, we are in a premium, and maybe this market wants to start breaking down. But how do we know? How do we know this market doesn't want to just keep pushing? Look at this box. I've already drawn the box. It might decide it wants to come back and consolidate back up to this level again. It's done it before. It's come up here before. It's come down here. Why not? Why couldn't it come back there again? It could do, because we're in the middle of a range and anything's possible. You see? You see why we only want to take trades from premiums or discounts? Because in the middle of the range, it's like, yeah. And you might be zoomed in here if you just, oh no, this is at the top of a range or bottom of the range. I'm definitely, but bro, you got to zoom out. Got to see the bigger picture and be like, on a smaller picture is this, but on a bigger picture, you ultimately what you want is you want the stars to align. Smaller picture, zooming out, higher picture. You want them all to align. Like, bro, they are at a premium in every single one of these instances. That's different. That can give you more confirmation, more confidence. But if you like, oh yeah, we're in a premium on the daily, but when I zoom into my 15 minutes, we're in a real discount. Well, if you're looking to trade based upon 15-minute structure, based upon a 15-minute low, then you can't just be like, yeah, I'm selling it because we're in a premium in a higher time frame and I should be selling. Well, you're on a discount on a smaller time frame and you are trading, you are living, working, maneuvering on a smaller time frame. So you've got to respect those laws. Otherwise, you're gonna go to jail, boy. Guys, amazing day, amazing day, amazing day. I hope you have an absolutely fantastic day, being able to go and do the things that you want to do. I hope that you are making steps towards whatever your goals are, okay? Whatever it is that you want to achieve in your life. I heard the motivation I was listening to maybe yesterday was talking about, every day that you wake up and, it's a new day, it's about that you've got a new opportunity to be reborn. Yeah, to rebirth of yourself. The rebirth of yourself, being able to reinvent yourself. Today, if you want to do something different, you can get up and do that thing different. Today is gone. I say yesterday is gone. And today you can do anything you want to do, guys. All right. And that should give you power. That should give you hope. That should give you the desire to go and do certain things. All right. Guys, I'm going to play Trader. And it says, my trading instantly got better once I did this. Spent over $14,000 in trade on challenges. And let's go and see what he has to say. But guys, good morning. God bless for the people that have been watching at home.